Good morning, future business owners. Today I am going to talk about how to manage your business finances. I am going to give you several tools that will help you manage your finances. Just a disclaimer here, I am not an accountant, but the things that I'm going to give you today, it is very imperative for you to know, even though if you have an accountant or a bookkeeper. So it's really um, imperative for your business to thrive and survive, and to take hold of your finances, so you will be able to make these key important financial decisions for the future of your business. So, if this is the first time you're tuning into my channel, my name is Chawanne Burns, and the whole purpose of this channel is to help you get started off on the right foot in owning your business. So, if you can see, I am screen sharing um, because I have a PowerPoint that I want to work through with you all. So, let me just make this smaller. And hey, this is my first time doing the screen sharing thing, so hopefully everything will go smoothly as anticipated. If not, the show must go on. We will still record, and I will still try to relay this important information for you. So the title of this video is How to Manage Your Small Business Finances. This is a part 1 of 4 series, because we do dive deep into some heavy stuff. And I want to take my time because I know if you are a first time business owner, and some of you may not have taken a business finance class. So all this stuff is like a foreign language to you. So we'll take our time and dive deep into these things that you will help you to be successful in running your business. So basically, we are going to go over some basic stuff that you need to do to help you get set up for the future in owning your business. We're going to go over for some key financial terms. And with these key financial terms, we are going to discuss them um, and what they mean to you or your business in a financial aspect. We are going to show you, or I am going to show you, how to set up a spreadsheet, and I'm going to show you some examples. Not in that order, but we'll do it, okay? So, about myself, I am a business owner. Prior to that, I was an engineer, and I successfully owned or own, because I'm an owner right now as we speak, um, operating a window treatment business in the online retail. And my claim to fame is raising my kids. Okay, so why do you need to know your finances? You want to not go out of business. So that's why you need to know finance. You don't need to be an accountant. You leave the heavy stuff, the heavy lifting for your accountant, but you do need to know the basic key terms. And when you get an accountant in place or a bookkeeper in place, hey, you want to keep your money. You want to know if somebody's stealing from you, right? And you want to know if you're spending too much money on such and such things. So it's important. Another reason is to increase thy cash by knowing that thy cash. Increase. If you don't know, half of the battle is knowing. So the basics, you need to separate your cash. Okay. Some people start a business and they keep their cash in the same as their personal stuff. Commingling cash is a nightmare for you in your accounting department or accountant. Separate your cash from your personal cash. This means you need to separate a separate bank account. So you need a business checking and business savings account, and you also need a business credit card. Okay, so those are the things you want to write down, like right now, because if you don't have them, it is imperative that you have one, because you can't know what's going on if you are commingling your cash. Cash balance. So what's that mean? It makes a difference. How much cash do you have, and check it on a weekly basis. Do a bank reconciliation at least once a month. Now, I said once a month because, you know, you need to look at if you don't have that many transactions going on, do it once a month. But if you got a lot of transactions, a lot of cash flow coming in and out, you might want to do that once a week. Just get in the habit, looking at your bank statement, seeing what's coming in and what's going out, or what hasn't been paid. And so we'll be talking about that later. So cash balance. Cash balance is something that you could look at. If you could go online on your bank account or your checking account, cash balance is basically what goes in and minus what came out. Cash balance is what is left over. Okay, so what you put in there minus what you took out. Cash balance is what is left over. So just remember that. So cash balance, and I say once a month, but when you first start if you got a lot of transactions, you need to do a cash balance. So I use the term reconciliation. What does reconciliation mean? Reconciliation is basically saying, hey, I'm going to log on to Bank of America or whatever, Chase Bank, whatever bank that you bank at, and see what transactions has been posted during that day, during that week, during the month, however often you're doing the cash balance or reconciliation. So I put up here on this is just a screenshot of several transactions from my bank. Okay, if you haven't seen this before yet, now cash balance versus a statement is two different things. A statement is something, a bank statement is something that the bank gives you once a month. Okay? So get used to seeing this, because if you don't have an online access, you will have to go into or call in and to see how many checks have cleared, or what came in or posted on your account. So cash balance and bank statements are two totally different things. Cash balance, when you're doing a cash balance or reconciliation, is basically real time. Bank statements, it's that prior month or whatever 30-day period history of what came through, and it would tell you, hey, you got certain checks that you might get a fee from it if you bounced a check, and that's why you should do a bank reconciliation, so you won't bounce checks. Okay, so I ran off on a tangent because I just wanted to make sure that you know cash balance and bank statements are totally different, two different things. So this is my cash balance on November the 15th. I wrote a check for $717.34. C means cleared. Now, if you're wondering about what, I'm pointing at it like you see it, but if you see my mouser, if you are wondering what C or their nomenclature means, they will have that on your bank statement, okay? So you will know C means cleared or cash, okay? Cleared or cash, depending on your bank. So November 15th, negative means $717.34. That means it was taken out of my account. That was check number 1036. Okay? So if you go down here, you see all these mobile deposits. They're not going to have a positive number on there or a plus sign. It's just going to say 99 or whatever amount that's being deposited or put into my bank. And the way you read these cash balance or cash statements or transaction statements, because it's not an actual bank statement, it's real time. The way you read this is the top. This is the order, bottom up. This is the last transaction, this check 1036. So this $9,224.35, that is the last balance or what I have real time right now. Okay? So if I looked at here, no, I want you to make sure that you know this. If I looked November the 15th at 12:08 a.m., okay, or p.m., this was the last transaction that came through. And this is my real time balance. Okay, so why are we doing a reconciliation? So I did an example. So you see what I have right here. Now, I know I wrote a check or payroll taxes is going to come out of $82.50 sometime this week. The 15th, I believe it fell on a Friday. So sometime this week, payroll taxes will be coming out. Rent payment, which is the lease payment of $1,300. Franchise fees, which I owe on franchise fees. And these are all like general estimates. I just wanted to put that on there so you could know what I'm talking about. Franchise fees, $5,800. Contract payment installation, $750. My bank reconciliation, I said I wrote all these checks plus this one, hopefully, plus this one, reconciliation. The total that has not been posted on my account is $79.32.50. So when we say reconcile, we want to take the $900 or $9,000, $9,224.35, subtracting the payments or the checks that has not been posted on my account, and we have a cash balance of $1,291 in that account. So if you do that on a weekly basis, you won't be bouncing checks. Okay? If you do it on a monthly basis, you can kind of see, hey, this month was kind of tight. I didn't get enough, I didn't make enough, sales or whatever. So you'll start being very knowledgeable of how your business stands. That's why, if we go back up to this other slide, that's why we need to separate our cash, okay? Because we need a clearer picture of our cash balance. Can I do anything with $1,291? I don't know. Can I? I mean, maybe I got some outstanding bills out there. It all depends on what type of business you're operating, okay? So let's go to our next slide. Manage cash flow. So once we know we're very knowledgeable about our cash balance because we're doing it on a weekly basis just to get the hang of things, and maybe we'll start doing that on a monthly basis. I suggest a weekly basis if you got a lot of high transactions or whatever. Manage cash flow. It makes a difference. Track how much a job costs, how much you collect for a deposit, and manage your staff effectively. If we know, if we just keeping $1,200 in our account, is that going to keep us afloat? Probably not. You probably will be in some trouble, okay? So you need to track how much a job costs, how much you could collect for a deposit, and manage your staff effectively. Because maybe you need to go up on your deposit. Maybe instead of collecting 50%, maybe you need to collect a higher deposit. That helps you with your cash flow. Maybe you're not charging enough. That will help you with your cash flow. Maybe your staff is sucking up hours that they don't need to. That will help you with your cash flow. And maybe they're doing, clocking in earlier than what they're supposed to, or staying later than what they're supposed to. Hey, every little dollar counts, and you don't want them to take advantage of you being nice, okay? So we don't know manage our cash flow. We don't know how to manage our cash flow until we start doing our reconciliation on our cash balance. Okay? Now, this is the fun part, break-even analysis. So managing your cash flow is basically tracking every dollar. Maybe you didn't collect the deposit, how much you got to pay in overhead expenses, but you really don't know until you know. And that's when you get into the break-even analysis. So if you're like, what in the world is a break-even analysis? I am going to show you, because we are going to open up a spreadsheet and we're going to go over the break-even analysis. So hopefully you have an Excel spreadsheet or Excel, and if you don't, I put a link down there for you so you could download it. I think it is $8.99 for Microsoft Office. If $8.99 a month, it's really not expensive at all. And that you could get it on several computers for that software. So I am on a Mac. So I need to go to my applications. And we'll wait till that comes up. Hey, and I hope you're getting a lot of information or some valued, really useful information to help you operate your business. If you have any questions in my comment section, you can always email me, or you can put your comments in the comment section. If you want a spreadsheet, or if you want this, what is it called? PowerPoint, I could email you a PDF file for you to get the PowerPoint. And if you're like what you're hearing and you like the valuable information that I'm giving you, Please click on that like button, hit the subscribe button. I am uploading videos very frequently, and hopefully this next part that we're going to talk about will be up in a few days. I just got to edit the video. So let's see what's going on here. Okay, we want to do our break-even analysis. Okay, so we are going to start off with naming our columns. So we have fixed, so we have a fixed, which is a dollar amount, versus a variable, expenses. And that's going to be a percentage. So fixed versus variable. Both these. Then we'll put a double line on them. Actually, we shouldn't put a double line on them because it looks like we calculated something. So we'll just put a thick bottom on there. Okay. So cost of goods sold. Cost of goods sold is basically how much you pay for the material. Okay. If you have an installer, I have an installer, so I'm selling products to install on in your home. How much you spent on advertisement? How much did you spend on sales commission? Credit card fees. These are all variable expenses. And if you notice, I put this wrong. Should be percent sign. Vehicle maintenance. And remakes or oops. Owner salary, your salary. You might be saying, well, I don't have a salary. You should. Pay yourself first. If you think doing it as a hobby, then you don't need the spreadsheet. But if you're trying to make some money off of it, this spreadsheet does matter. Office staff. Rent. Telephone. Legal services. That's like accounting and bookkeeping and stuff. Business insurance. And if you have any other fees associated with doing the business. So depending on what type of business you operate, 16 rows might not be enough. You might not need 25 rows. It all depends on what is coming in and what is going out. Okay. Now on this, before we start putting numbers in, let's format this. This is percentage. And this is dollar. This is average Okay, so we'll put monthly sales. Let's see, monthly. We'll put monthly sales average. Number of sales. Average sale, ticket sale, number of leads, and closing ratio. So if you offer a service, you have to get leads. Where are your leads coming from? Don't know. Maybe you're getting them from the internet. But, so since we're in the month of December, I want you to look at last month and put in how much you made last month. Okay? So last month, we're just going to say, just for thrills, I made 25 grand last month. This should be $1. Number of sales. Hopefully you guys can see that. I'll make it a little bit larger. It is kind of small. So we'll put it over here. Okay. Okay. So number of sales. Say, for instance, it was 12 sales. So what is our average ticket? That is basically equal sign sum. You want to take the dollar amount divided by the number of jobs sold. So my average ticket sale is 2 grand, a little bit over 2 grand. Number of leads. If you don't have a CRM system, it's going to be hard to track this. But now, if you do your own books, just go back to how many appointments you had last month, and that's the number of leads you had. How many people that you gave a consultation to? That's how many leads you had. So we're going to say 30, or no, 20. So how do we figure out our closing ratio? We'll say sum 20 minus 12, comma, / divided by 12. You want to change this to a percent. So our closing ratio is 67%. Now we're going back to our break-even analysis. This is variable. This is all based off of this. So to find out what our cost of goods sold, we want to do an average. You should know how much you're paying per item. So average cost of goods sold, we're going to say 45%. Some of you might be 50%. If you're offering a service, this might be hard to track. You're not actually selling something tangible. You're selling a service. So you might not have this column. Your installer, we say it's at 5%. Advertisement. They said you put whatever you want to make, you're supposed to do 10%, but I usually do maybe like 3%. Sales commission. I pay my sales girl 10%. Credit card fees is 2.5%. Vehicle maintenance. Vehicle maintenance, we could say maybe 1%. And then oops is 1%. Okay, owner salary. How much do I want to pay taxes on? That's my owner salary. So I'm going to say actually I paid myself more than that, but we'll say $2,000 because that's what I want to pay the IRS. Office staff. We'll say 750 or 700, I think. That's probably a little pushing it. All my office staff is part-time. Now my rent is kind of high, $1,300 because they rent up on rent. Telephone will say 150. Legal service is a pretty penny too. But we'll say right now I'm paying $350 a month. This is for bookkeeping and accounting purposes. I probably should put 500 because that's what it seemed like I'd be paying them all the time because they always coming up with something else. Business insurance, we'll say $200 a month. Fees, I'm not for sure what I will put right there, but fees. But you know, I did make a mistake. Vehicle, because we do have a sales vehicle, and that's $460. Okay, so you want to sum your fixed expenses, and then you want to sum so 68%. We'll talk about the 68% later. So this is total. Okay, so cost of goods sold. So if Sally buys a book from me for $100, I then order the book from my supplier, and the supplier charged me $45, okay? Now, we didn't say, we're doing simple spreadsheet, but we haven't included shipping, we haven't included taxes, and those are all costs of doing business. So hopefully you're passing that along to the customer. My monthly sales, this 25 grand, this normally, when I put that in my system, it normally doesn't include the sales tax. Okay, so this number is a minus the sales tax fees and minus the shipping fees, because I'm wholly passing that to the customer. Okay, so I don't really need to calculate that. It just be an extra line to subtract and to add, you know, so it should be like, hey, I charged them $8. The shipping company charged me $8. I shouldn't be coming out in my pocket for nothing, for shipping fees or anything of that nature. Now, sometimes my installer, sometimes I do pay a little bit more for my installer. We tried our best to pass that up to the customer, but sometimes if we have a mistake and I can't go out there, my installer goes out there and he charged me more, you know, so it's that kind of thing. So I'm losing money. So we try to not make a mistake. We try to, if we installing them, we try to get that installation over one and done. Okay. So anyway, so this is my fixed expenses is $5,300. All right. So your break even. I must be getting tired. My bad. So this is my break-even number for the month, okay? So I need 16 grand. So if I need 16 grand. So if I did 25 minus this, I should have cash left. So I'm actually in the black. You could put a conditioner in here. Okay? But if we say if it's more than no cancel. This is how we're in the negative if we only made 10 grand this month. Okay? But if we made 50 grand, we're in the positive. You see? So in the negative, just see if we make 16, 30, 30, 8. We broke even. I'm just playing around with this. Say for instance, our close ratio went up. Instead of 12 jobs sold, we landed. So instead of playing with your average ticket sale, so say for instance, our average ticket sale, we're not gonna mess around. We're gonna just put this a flat number in here. Okay. Our average ticket sale is that. It's $1,800. Just to go back, because I calculated the closing ratio wrong. I don't know what I was thinking. It is basically the number of sales divided by the number of leads, okay? So your close ratio is the number of sales divided by the number of leads. I don't know what I was doing. I was making it harder than what it is. Anyway, so say for instance, your close ratio was up. So say for instance, your average ticket sale was $1,800 and you closed 17 sales last month of an average ticket price. So you could calculate how many numbers of sales that you need to get to your break even. So my break even is this divided by this. So literally you need 9 jobs to make this money. Okay, so you could think of it that way. To go further back, not only you need 9 jobs, if you closing at 85%, how many numbers? So number of jobs or number of sales. I'm sorry, let me just put it like this. Number of sales needed, number of leads needed. So if you need 9 jobs to make that break even, the 16,000 break even, how many leads do you need? So if I'm closing at 85%, all you need to do is go your number of sales divided by your closing ratio. So how many leads do you need to get 9 sales? You need almost 11 leads because you're closing at an 85% ratio. So what if this number goes down? I'm just trying to show you the effect. So you still need 9 sales to break even, but you need to do 15 consults now. So depending on your close ratio, it directly affects the number of sales. We won't know our close ratio until we have some type of history to go back on. Okay, so if you haven't been operating for a long time, we don't know your close ratio. You can go by a month basis, but usually the best indicator is to get at least about 6 months data. Okay, so if this is the first time you're tuning into my channel, my name is Chawanne Burns and I'm a business owner. I need you to click on that subscribe button in the notification. So this concludes our first part of our financing, managing your finances video. And our next video will be talking about getting more deep dive into not necessarily your break even analysis, but how to track your month to month or daily sales. And we'll talk about cost goods. We'll break down the fixed versus variable expenses and all that good stuff. We'll talk about P&L statement. So please click that subscribe button, click the notification bell, and I will talk to you later. Sending all my good to you. Bye.